Uganda's economic growth is expected to reach 4.5% in the new financial year, despite the less growth recorded in the previous financial year. But with financial year opening with a lockdown, the projections are in doubt. On the other hand, however, US, China, and Western Europe will grow at 6.4%, 8%, and 4.5% respectively, according to the IMF. This means that advanced economies are recovering faster than the likes of Uganda, and this has advantages and disadvantages to Uganda.
Most of our FDI comes from rich countries, so you expect that FDI now will start recovering. Remember that in 2020 and part of 2021, we saw that the foreign direct investment declined in the case of Uganda. We moved away from, say, 1.2 billion to around $800 million in 2020. And this year also the same story. So we believe that once the global economy starts recovering, so things like FDI will start recovering. But also our exports, once they also start growing, they demand more flowers, they demand more fish. And in that case, therefore, we export more.
So, for foreign direct investments and export, things may look up except for tourism.
Yes, we'll get more tourists coming in because now people are relatively secure in terms of their income. But the question is, once you have our world, which is now facing the third wave, with the vaccination that are not likely to take place in 2021, probably, and 2022, obviously, the flow of tourism, tourists coming to our side probably could remain subdued.
Therefore, the new parameter for global recovery will require a massive vaccination, and this is what Uganda must hasten to do. But there is a downside when the US, China, and Europe recover while Uganda is suffering.
Once advanced economies start recovering, you saw that their inflation is rising. USA, Europe inflation is rising, and UK. Oil prices, demand for oil has increased, okay? Because people are now driving their cars, they are going to the beaches, etc. The demand for oil also rises. And as we see, international oil prices have risen substantially. So once oil prices start rising and commodities, it spills over into our domestic economy in terms of inflation. Obviously, as fuel prices start rising, the pump prices here also start rising. Even if you assume that exchange rate remains stable.
So, with the litre of petrol in Uganda now at 4,000 shillings because of tax, there is likeliness that it will grow up if international prices significantly awaken. Global oil prices are hovering around $75 a barrel, higher than the $40 when COVID first gripped the world in 2020. The other risk from this unequal economic recovery is depreciation of the exchange rate, where the shilling has remained strong against the US dollars, averaging about 3,500 shillings, not seen in a quite long time. This may arise from advanced economies raising interest rates.
Once they tighten monetary policies, one aspect that comes up front is that actually the portfolio guys who have been seeing coming to invest in Uganda securities now will see what we mean by a flight to safety. They see a safe haven in advanced economies.
Simply put, part of the reason the Uganda shilling was strong was that foreign investors brought in dollars in order to buy into government treasuries, bills, and bonds, now holding in the excess of 1 trillion shillings, and could choose to take the dollars away as things get better elsewhere, affecting the exchange rate. So for the country's economic managers who are dealing with the COVID-19 emergencies, low vaccination, and likely low revenue collection, their work is cut out. Ismail Musa, Ladu, NTV Business.